This is the daily fiscal pulse for the 10th of July, 2026. One important note up front. You're looking at a look back here, not real-time data. Everything we're covering reflects conditions through Friday's close. Let's start by understanding what's capturing market attention at the moment. AI and tech are clearly dominating the narrative. You're seeing stories like Chipotle launching its first Mexico location gaining real traction and influencing price movement. That's useful context, but what we really need to focus on is where the actual money is flowing. When we look at today's actual figures, the net fiscal transfer came in at $3.9 billion, driven primarily by tax receipts pulling in $10.5 billion. At first glance, nothing stands out as particularly noteworthy. Here's what's interesting though. Prices are holding their ground. The ES closed at 7,621, sitting comfortably above the 20-day moving average of 7,513. That 20-day range spans roughly 267 points. So despite fiscal pressure working against it, price action is actually maintaining strength. When we zoom out a bit, the medium-term picture becomes clearer. Government spending is averaging about $12.0 billion daily over the past 5 days. Stack that against the 20-day average of $7.0 billion, and you can see more cash flowing through to households and ultimately into financial markets. The year-over-year data tells a consistent story. We're sitting at $1,279.0 billion in fiscal year-to-date spending, which represents roughly a 3% decline from the same window last year. That's a substantial pullback in fiscal support, and it's worth tracking for liquidity implications. From a trading perspective, the fiscal setup right now doesn't offer a compelling directional bias. Our conditions gauge sits at +2, but here's the context that matters. We've navigated similar conditions multiple times before. Despite tighter liquidity conditions, the S&P has averaged around +0.8% returns over the following month. Money doesn't flow in straight lines with liquidity. Markets can and do push higher anyway. There is a leverage angle worth flagging. Leveraged funds keep adding to long positions while margin debt has climbed to the 100th percentile. That's stretched. History suggests these extremes function more as a caution signal than a bullish one. Looking ahead on the calendar, the 15th of July marks the SSA payment cycle on the third Wednesday. That timing typically shifts shorter-term flows. The following major Treasury coupon interest payment window shows up around the 15th of August. We don't have a decisive fiscal signal pointing either way at this moment. The flows on the schedule ahead will be what tips the scales. That's your edge to watch.